Good morning. So we start today, let me put it in big, much better. We start today with Dixie. So we had this nice move up last week, starting from the yearly open, still the same base that we have been turning around for the last weeks, kind of ranging in this area. So we get this bounce that we have been expecting. I still hope and think we can see much higher, probably up to this level, at least 93.50 and break higher. That's the idea. So if we look at this time frame, we are on the 4 hour. We can see why we stopped there. We stopped there right again on the weekly 20 moving average. We have some levels there. We have some fibs around. We will look at the fib chart after. But I wanted to show you this one because we see how the 20 weekly moving average has been holding the price in many occasions. We usually say that the third intent is the good one. So we have the first, the second, and the third now. We bounce from it. We pull back a little bit from it. We will pull back, I think, a little bit more before finding some momentum to go higher. So from the weekly data, if we look at the data of this week, we can see that on Monday today we have some small bank holidays, but not a lot of big datas. On Tuesday, same thing, but we start to see some good things to move the market. The core retail PPI on Tuesday, that's something interesting. Wednesday, nothing besides just the CAD data. Still the same CAD. We know we are short CAD as much as we can. And of course, we have the FOMC, which is the big thing of the week usually. We have a slow week before FOMC, so that's something we know in advance. And then we have some CAD again, New Zealand, Aussie. And on Friday, it's very little data. So the big days will be the FOMC on Wednesdays. And probably on Tuesday, we can start to see some move with this core retail. So that's what we have that could probably move the market or create some dynamic in the market. So now what we want to see is how or when could we break above this 20 weekly. If we break above it, then generally we break above, we come back, and then we bounce from it in many occasions. You can see that in the past. Sometimes we just break and come back inside. So, but anyway, it's something that we see has been holding the price in many occasions. So it's important to keep it in mind. If we look at the daily, we have the daily here. So the daily 20 is something that intraday always gives some reaction or some bounce like you see here. So the daily, we are now above it. It has been long to break it, but we are now above it like we have been this time. The difference is the following. I will show you on the fib. To finish with this chart, we are still above this broken 4-hour or daily channel. We went up, pulled back on the 20 weekly, came back to retest the channel or the yearly open, and bounce again last week. Now, if we look at this chart, and this one is interesting because that's where we have some levels, important level that we are using. So it's the same thing. We are in a wedge. We can see it better on a 4-hour chart. We have this wedge. We broke above it. It can be a wedge. It can be a channel. That's different interpretation. But in this one, I kept the wedge because that's the two options we have on the Dixie. If you look here, there is this inside trend line inside the channel that was there before when I started to throw something here. Then we broke above, came back inside, and then up again. So that's why I keep it on this one as a wedge to keep always the two options always being trying to be open-minded, not one-way view. As we discussed already, I think last week, even if I have a bias or even if I have an opinion or of what the technical is telling us, we always need to be open-minded. So, looking at this weekly, at this fib chart, sorry, on the 4 hours, we still have the two big fib. This one, which is the fib of this move up, and this blue one, which is the last swing down. So, swing up, swing down in blue. Why do I keep those two one? Because this one, the green one, if we look only at this green, okay, so we have here only the green one, which is the past swing. We see we stopped, and that's important. We stopped on two big things, the giant 38.2 fib here and this 88.6 fib. So generally when we pull back on the 88.60 fib, we call it the last barrier of the trend, like the 236 on the other side, more or less. So it's important because we stopped right on this fib. If we look on the daily chart, we stopped to the body right on this fib, meaning the trend here before this move down is still valid. So we can see this move up that I have been thinking for some weeks we will see. So that's what we have now. The other interesting thing, if we look at those fib, is this inside fib of the swing down, and what we have now on a daily time frame. It's the first time we could open a candle above the 23.6 fib. So the back test of this fib that we will probably see today, I think, we'll probably pull back a little bit inside this fib. We have here a big support area, so we can probably spike a little bit above it, but it's nothing. It's really nothing. Probably a fib difference. So I think this spike went to the 23.6. So we have this area where we will find some support, in my opinion. All the question now will be, how do we react on pullbacks, and how strong can be the pullbacks? So that will tell us if finally we have some momentum up that is starting to be there all the time, and that is starting to grow. So first reaction here will be important to look at. Of course, we can get long at this level, that's clear. So 90.45 level is important from the fib point of view. And then we have the 21.4. So this area here will be something we need to look at, because that's an area where we will get some reaction. Then if we go lower, we will have some more support and resistances. And then in this case, we can look at this chart, which is the tool chart, where we have our black and green level. So we see, and now you understand why we stop a little bit under this green or green-black level, which is for me the next area for the tools to stop the price. I don't think, unless we have something strong, I don't think we can break that in one time. I repeat, unless we break it, for example, on Tuesday with the US data with a very strong number, for example. In this case, we can just come, bounce a little, and pierce it right away. So what we expect, as I said already, we expect a pullback to the 90.45 area. So that's some numbers that you need to keep to have on your charts. So if you want to have always something clean, you keep them, you have the levels, and you know this one is the 23.6 fib. That's what I do on my charting. I always put the information, the important information on the other chart, so I don't need to switch from one chart to the other one, and I have the most important thing on this chart. Then if we want to see the second level, sorry, it's 90.36.8. So 90.36.8, we can put it here. Clone that one. We will put the 90.36.8. Okay. And then we have everything on the chart. Okay. So we have here the two level, and it's the 2140 fib, not the 23.6, of course. So okay, so now we are ready for the trading. As we said, we will pull back to this area, probably up to that level, which is an important green level. We have respected it in many occasions in the past. So it's a place where we respond a lot. So we keep that in mind. We have those fib here. We have this, sorry, this green support here, and more support lower that I will probably update later if I see we go lower. My 2 cents would be now, really the important thing is how we will behave on the touch of those levels and looking at our tools. So it's very important for me to see what's happening, because this thing is telling me how is the momentum. Is the momentum shifting or not? Why? How do we see that? For example, here we had this touch here. We had some data, of course, but what we see now is we had a touch. I will move it a little bit this way. So we had a touch of this level with a small setup, and that gave us a strong reaction. So it's something interesting to look at, because it tells us the upside momentum at this point of time was really strong. Now we had this big setup here, which is not big, but it's quite a big setup that usually gave strong reaction. So we have this big setup with the two indicator red. I'm missing one stochastics here, so it's under there. So right here, I don't know what. Okay, so let me put all the stochastics and everything. So we are here on a 1 hour chart. We see the the fast and the slow stochastics. The slow is not yet ready. It could go a little bit lower, but that's what will tell us how we go with the momentum. So when this one will be here, and that one at the same time, plus this one giving us a green signal on a 15-minute and perhaps on a 1 hour at the same time, we will see how we react. If we react strongly on that signal, it means we have shifted on the momentum, or we are shifting. It means the market is now reacting in a bullish mode. So that's something I'm looking at closely, because that tells us the story, and that shows us how the price is reacting. Those two indicators, this one is a RSI-based indicator, this one is a candle-based indicator, but those two indicators, what they have is they are dynamic indicator. So they tell us the price exhaustion, and they tell us when we can see some reaction. So here we had a big setup on Friday. We went to a level, we have the 20 moving average weekly. You remember we have this confluence here, which is a big thing to break. But for now, the reaction has been very small. I mean, we didn't get a big red candle like we had here. So that's already something we can observe. Now, the next step is we come back here. That would be great on the 23.6. In this area, that's what I will look at to find a setup in this area, and I will try to get long in every level, the 23.6 fib, the 2140, and this green level. And according to that, if we have a green setup, we will know more about what DXY is doing. The main reason why I saw that we would bounce on DXY was coming here. It's a daily chart. It's the price 6 indicator. And we had a quadruple. I just remember for the people that didn't saw that when we were inside. And it's good that we look at this chart too. I will explain you why now. But what we had here, we had a big divergence here with double signal here, double signal here, divergence on both stochastics, and that gave us this move up. Normally, such a setup should provide, as we saw in other occasions, should provide a much bigger move. This move was done on the same setup, but on the other side. We had divergence, 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 and the divergence on a dynamic indicator is much more than a regular divergence on RSI or something like that. So if we look this move down, you see that that kind of setup are really giving strong reaction. And we have that here. We had it in the past in other occasions. For example, here, you had this divergent, you had the divergence here, and it gave this big move up that we saw on the DXY. So that's why I was looking for this bounce, and that's why I'm still looking for something higher, because usually those setups are giving a strong reaction. Okay. So I think for DXY, it's complete enough. I will update in the week if necessary. To sum up, we look to this area. We want to see a setup here, and we want to see how strong we bounce. So basically, what we will get will be something like this. We bounce around this one, come back here and test, and then we'll see what will happen there. Or we go to this one, this area a little bit lower, the 21.4, but for sure we will get a setup here. For sure we will see a reaction here, and that will tell us how price is, how the momentum is, and that's very important for the future, because that's what gives us some confidence to take some trades.